Hello, Woody here with the latest Fat Tail Daily video, and it's an extra special day today. Callum Newman, how old are you, mate?
How old am I, or how
Yes, it's your
am I?
birthday today.
I am. I'm 43 today, so
Ooh,
a
don't look a
special
day
day.
over 42 and a half.
So yeah, it's pretty similar to 42 and a half, but still glad to be here. So that's the main thing.
Now, I got a statement that I'm going to start with. Now, for those
Okay.
watching, do you know how Warren Buffett once joked that the secret to a successful marriage is low expectations? Well,
Yes.
that's exactly the wisdom that you're applying to an unexpected place, the iron ore market. Can you please explain?
Well, so well, yes, I used the Warren Buffett quote there in today's article to illustrate. Actually, it's not just particular to iron ore. I'm talking about in general speaking. So low expectations in any sort of share price obviously gives you a suppressed valuation because there isn't a lot of premium. If no one's excited about it, no one's projecting big profits into the future, then you're going to get usually a fairly suppressed or low share price. And I find iron ore fascinating because over the years I've followed the market. I can guarantee you every single year everybody expects it to go down, and they usually give China a kick in the guts at the same time and say that it's going to fall over, there's too much debt, yada 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 yada. Ghost cities way back when I began, and thus far
What
China has
happened
held
then, by
up.
the way? Yeah.
And last year, which might surprise people, they imported more iron ore than they ever have for the year. So again, so just in terms of the setup in the market, so I can't tell you what iron ore is going to do this year, but BHP, Rio, Fortescue all trade on relatively low expectations around their iron ore earnings rather. And yet, if iron ore surprises to the upside, which it has done twice in the last 5 years, they will be very compelling potential trades because they make a lot of money as it is. If it goes for an unexpected rally, well, that's just cream that the market will chase.
So they're the big stocks, right? Are there any smaller, more sort of specky, more interesting plays that you're looking at in the iron ore sector?
There are definitely smaller ones. There's Grange Resources, there's Phoenix Resources, Strike from memory, going back a bit. There is MGX is one I've covered before for Australian small cap investigators. So generally, I came to this idea as a trader. So the big guys give you the liquidity, but certainly if iron ore does go on an extended rally, then the little ones will follow the big boys for sure.
Hmm. You also highlight some contrarian indicators like China's electricity output growing 6% despite bearish GDP forecasts. Could you elaborate on what other metrics you're watching that might signal a disconnect between market perception and reality?
Well, yes, I came across that from a guy called David Goldman, who's really interesting when it comes to China. I used him a couple of years ago. Again, you only got to go back 2023 when everybody thought China was going to collapse again, and I wrote for Livewire, I think it was at the time, that it was a fake crisis, and David Goldman helped me then. He just made the point that even though GDP projections are going down, that electricity output in China went up 6% last year. So that's very interesting. And another indicator is that the Chinese people have just a huge amount of money stashed away. The level of deposits in China is enormous. So, of
Mm.
course, put this in context that most people in the market are always worried about Chinese consumption. Well, there is a huge amount of firepower there. Can't speak today. Firepower there if they want to start spending. So with iron ore, of course, everybody's always worried about the demand side, where China and the economic growth kind of thing. An intriguing angle to watch is the supply side. So as it is, the big boys, BHP, Rio, and Fortescue have all produced pretty much as they can for the last 5 years.
Yeah.
If for any reason they start to struggle to hit their guidance, well, that's going to tighten up the market. So these are all just scenarios I'm tabling. I'm not saying iron ore is going to be
Yeah.
the trade of the year, but I'm just watching it because you can get some really good trades away in this sector, which not many people pay attention to anymore.
Mm. Talking of the sector, you also touch on how the big miners are still hugely profitable at current prices, which are around $100 a ton. How do you see that? How do you see that profitability playing into their strategies, particularly as they deal with things like declining grades and having to replace those mines too. Was that only going to add to the bullish outlook?
Well, it could add to the bullish outlook. Well, as it is now, they're using their iron ore cash flows to invest in other areas. So BHP's gone big on copper. Rio's just put the big bid in for the lithium asset that they're buying. So, I mean, iron ore is extremely profitable for them. So they can take all that money, and thus far they've paid out a lot too to their investors over the years. But again, another plank, if you like, to the iron ore bull case is that they haven't really invested much capital into their iron ore divisions for future growth. They've done it as replacement mines for with that in mind, but there isn't a lot of supply that they can bring on in the next 5 years if for some reason they were asked to do so.
Mm-hmm.
So it's just something to watch. But as it is now, they take their iron ore profits and pump it into other sectors.
You draw some parallels to 2019 and 2021 as well, when an unexpected bull runs caught the market off guard. Are there any particular catalysts or anything you're looking at for 2025 that might trigger a similar surprise move?
Well, the one that everybody's watching already is for Chinese stimulus, right? Because the assumption is Trump will try and hit them on trade, and then they'll push back and go, well, bugger you, we'll stimulate our economy and build it out. And again, that's part of what they do with their Belt and Road Initiative, where they build the infrastructure in the countries around them to diversify away from the Western market. So that's coming in. But as it were, but that's sort of well known now. So for 2025, if we were to get a surprise catalyst, I think would have to come from the supply side. So something that knocked out either the Brazilian production or something in Australia. So we got a small hint of that when a cyclone just hit the Pilbara. In the end, it didn't seem to do that much. But anything that sort of cuts off the flow of iron ore onto the market would be bullish for the price.
Finally, there's an interesting seasonal pattern that you mentioned about March, the month of March. Could you expand on how these seasonal factors typically affect the iron ore market? And is that something investors should watch for to position themselves around those patterns?
Yeah, well, it's just that usually exports out of Australia and Brazil are weaker during this period. And in the northern part of China, it's winter, so they tend to use less over there. So seasonally, iron ore is normally stronger in the start of the year, the price, and then weakens during the middle of the year and then picks up around September, October again.
Right. That seems like a trading strategy to me. Maybe we'll work on that one.
Well, it's a swing to watch for. But again, if anything comes along to disrupt the equilibrium of the market, then that's what you're really looking for.
Cool. All right, Cal, thanks for that, mate. I'll let you go off and enjoy your birthday, big 43. And if you want to read Callum's article today, just the articles below, click the link, take you to the Fat Tail Daily website. Enjoy it and let us know what you think. Thanks, buddy, and thank you for watching.
See you next week.